All right, can you see my screen?
You need to move the mouse. Yeah, perfect.
All right, I'm opening a new window. Can you see that as well?
Yeah.
All right. Welcome, guys.
Right.
Welcome again,
Bye-bye.
guys. Luke here. Today we're live both on YouTube and on LuxAlgo Discord. Today we had beautiful, very clean trades, even though it's a Friday. Fridays and Mondays are not that precise in price action, so we try to avoid these. But today was so clean that I just wanted to give it a stab. We did take some longs on NQ, sorry, on ES and NQ. We did take some shorts on CL. We'll go over them, all of them today. I was up today on around 400 bucks today. So if I just click this on the eval on the top steps. As you can see, it was right there. Damn it. There was another trade, I think, because the market is going to open. They refresh. But there's another trade here where I made another about 700. Gavin can confirm that for me because I recorded this and now I don't know why it's gone. Anyway, so up 1400 on the day. Almost very similar trades. But going to today, we had a lot of news, right? So you want days where there's news because then the market will efficiently, because the algorithms move the market. And if there's algorithm in the market at the optimal trading efficiency, then the market will deliver price efficiently. And that does not mean you trade on the news or during the news. It just means you trade, if you have a position open before, you can take it. If you have, you can trade it afterwards. But it was just action packed today, and it was a Friday, and so you have to stay on low risk. So before we get into today's trades, yesterday I was explaining. By the way, can you still see my screen?
Yeah.
All right, good. All right, so just yesterday we went live on Discord, on LuxAlgo Discord. And you know our strategy, guys. Our strategy is pretty basic. I'm just going to write again so we can use it for future reference. First is sweep of previous session low, high or low. And then step 2, Chosh. Step 3, FVG. 4, entry. Alright, it's just these 3 simple steps. And this these 3 steps, as much as they sound simple, as much as that can be consistent, help you pass your account. So yesterday we went live. Once we swept this, we went live. That was step 1. We swept previous session low, which is the New York AM session right there. And then we waiting for Chosh. We got Chosh about 20 minutes later during the live, which was great. And step 3 is FVGs. Do we have FVGs? Yes. So after the Chosh, we had one FVG here. We had another one here, another one here. All right. So most of you ask me, hey Luke, which FVGs do we have? We have a setup, but which FVGs do we take? Well, by the look of it, if you just by not touching anything, if you just enter here, and put your stop loss at the lows, so something like this, well, your stop loss is going to be like around 150 ticks, approximately 150 ticks, which is a big amount, right? Unless you have a 150k funded account, it's pretty big. Even for those accounts, pretty big. And imagine if it goes against you. So that's not wise, right? So that's the basic of it. But remember what I taught you guys. Always, whenever you have more than one FVGs, the best way to go at it is to take the FVGs that are in the discount, not the premium, discount. Anything in the premium, we don't care. Can be disrespected, can be respected, can be give a bounce like this, it can go down, it doesn't matter. The ones in the discount are the ones that are important. So how do you draw your Fibonacci to find the 0.5, so 50%, which is below it will be discount, anything above it will be premium? Simple, guys. Now people like take this low to this high. No, that's not right. One, because after we got the Chosh, we are not here yet, so we don't know what's on the right of the chart right now. I don't want to go into replay, but we're not there right now. So what do you do? Where's the Chosh? First thing you do is once you got the Chosh, then you can look at your Fib tool. We got a Chosh here, all right? So what swing low formed or that led up to this Chosh? Not this one, this one. So this can be our anchor point. And now after the Chosh, the first swing high after the Chosh is where you would anchor the end point of the Fibonacci. So where is here? Right now we don't have any not anything, not anything. Oh, now we have a swing high. So this is a high, higher, high. This is a wick higher than this one, this is a swing high. So you anchor it there, and then you extend it in time, and there you go. This FVG right there, let me just make it green just for the sake of it. We have 3 FVGs. This one is anything above the 50%. Everything in orange is premium. Everything in discount is gray. So if you want to buy something, you want to buy in discount. Just like Black Friday, everybody wants to buy like anything pretty much in the discount, and you don't want to buy it in premium. And likewise, if you're selling something, you want to sell it in high prices and etc. Right? You don't want to sell it in cheap prices. So likewise in the market, this analogy is exactly the same. It's not wise. Any FVGs that are in the premium, we don't recommend. We don't care about them. That's, most of you ask me, how do you know which FVG to take? This is it, guys. This is as simple as it gets. This FVG we do not take into account at all, and you see price just went through it as if it doesn't even exist. So these two, where below the 50% is, we have 2 FVGs, 1, 2. Great. All right. So you can basically take your entry at any of these FVGs. These two are both valid. You can put your entry here, and now your stop loss is almost 50 ticks less, which can be reasonable. But we can even like what I'm trying to teach you here, guys, is sniper entries, so you can get the best out of the entries, not just any random entry. Even though it does work, I'm trying to teach you the extra step, right, to get the edge. So what do? Well, like I said, any of these two values, any fair values, gaps are valid, but just like how we took, now here's the trick. Well, just like how we anchored our Fibonacci from this low to this high, you can go ahead and find your optimal trading entry. So what's optimal trading entry? You can disregard anything of these. We're only looking for 0.62 and 0.79. This is algorithmic kind of golden ratio for those retail people that trade on YouTube. This is ICT's sweet spot, he calls it, from 0.62 to 0.79. This is the optimal trading entry. So this is the best entry, not for you, but for the algo to take. And as you can see, price, if we just extend this out, so we have a lot of things on the chart, just make a rectangle. For example, that takes into account this whole thing. Just like that, let's give it a different color, like red. All right, this is our sweet spot. Now we can go ahead and remove this so we get a cleaner chart. Right, so this here, if I don't have anything on any indicators on the chart, this rectangle here is your optimal trading entry. Anywhere inside of it, even the top, even below it, or here, anywhere inside of it is the best entry you can possibly get. And the algo allows itself a little bit of room to find the best entry, because so we can do exactly the same. We can enter anywhere inside this to get the best entry. Now notice here, if I enter anywhere on here, even on the top of this, my stop loss now becomes almost halved, guys, right? And by contrast, your risk to reward is becoming much better. So also notice something else. This FVG is not inside the sweet spot. This FVG is. So even if you want an even better specific sniper entry, then you can enter exactly anywhere inside this fair value gap, inside the sweet spot. So for example, right there, that would have been very nice. Oops, my bad. Could put it right there. Or the best one is a sweet spot with an FVG and the middle point of this FVG, which is called, based on ICT terms, consequent encroachment, which is just a fancy name for a midpoint, or 50% from high, from this here to there. So as you can see, the price went exactly to there. If I can look, if I've just put a line from this midpoint of this is how you know it's algorithmic, guys. Humans can't do this. Look, guys, to the tick, just one tick away. This is algorithmic. So if you're in a trade somewhere around there, when you see this, you can be resting assured that your trade is in the right hands, right? If you didn't enter anything, if you entered there, that would have been awesome. Or if you entered there and see the price come back, respect this 50% of this fair value gap, and it pumps back up, this place is back up, then you can be sure, maybe you can even add size, or maybe you weren't looking to add any size, but now you can be actually looking to add size, because now this confirms the idea that we are bullish for now. So we can put our entry there. I'm not going to be precise. I would have probably entered there, and I told everybody to enter there. Put stop loss at the low. You can even use this low, and I'm going to show you where you can place stop loss, which is even better than these two lows. And essentially, your first target would be this high, which is, don't underestimate this, guys. Forget the 2 RR. This is 213 ticks. 213 ticks, guys. If I get my calculator out, this would be approximately $1,100 using one contract, just one mini, one. We're not even oversizing. You see people on YouTube going with 10 lots or something, 5 lots and stuff like that. This is just one, and this is not our maximum TP. This is just our partial place. So, yeah, and essentially, you would be looking for those. I'm gonna be explaining these in a second, but before that, so where would you put your stop loss? You can put it in any swing low. This is a swing low. This is not. This is swing low, nice. This one's also. So you can essentially put it at this one, but there's even a better one. All right, so what do? Your stop loss. Now remember, guys, I told you how you can find order blocks easily. This candle here, this bullish candle here, has a fair value gap. So this means if we have a red candle before it, that would be an order block, right? So from the high of it to the low, this is an order block, but we don't trade them based on order blocks, right? We just want to use these order blocks to put our stop loss. How do we do that? Just exactly the same. Take your Fibonacci from the high to the low, extend it out, consequent correction, which means just the 50% point. This is the 50% of this order block. So your stop loss can be, you could have entered anywhere here, for example there. Your stop loss doesn't have to be at this swing low, doesn't have to be at this swing low. It can be anywhere below this 50% of this order block. So, for example, right there, this would be very reasonable. And now, notice our RR became almost 3.5, right? I don't care. I want my stop loss to be there. I don't want to put it there because if we break below the 50% of this order block, then we're most likely going to come back to this low and come back to this low as well. So you're probably gonna get stopped out if we get stopped out. If we close below this 50% mean threshold of this order block. All right. So this is how I take my sniper entries. So that was TP1, and we're gonna go into today's trades as well. So bear with me. This was yesterday, and since we're very bearish, we had a very bearish move down. We expect the price not to come out. You know, our maximum TP would be previous session high, but that's unreasonable, guys. Price cannot go 900 ticks down and 900 ticks up in a matter of 1 or 2 hours, right? So we have to be reasonable. This is the maximum. This is our first partial. Second partial would be any high. Where's the next high? Right there. This is good, right? And it coincides with this fair value gap. And since we're bearish, we would probably respect this one. We didn't get to it today yet, but today we did, and that's why I'm explaining this, because I want to go back into today and explain what's going on there. All right, so that's about 500 ticks, guys. But anyway, what I'm trying to explain here is how far can we go back up there, right? Just like how we anchored. Let me remove everything again. Just like how we anchored. Look, we're anchoring the same thing. We're not anchoring anything different. From this low to the swing high of the chosh, you can add your standard deviations, right? And you want to see how far can the price go. After this high here, our next TP can be this one standard deviation away. Our next high can be, our next TP would be this high over there, which coincides also with 2, right? You see, 2, which is really important place. 2RR is 2 SD standard deviations is very important. We didn't get there yet, but we did it today. And that's another way. Or what do? We want to see from this high to this low, where is the discount? Where is the premium discount? We want to come back to if we're in discount, we want to come back to the equilibrium of any range we took. So basically, exactly this. I just want to extend it out more. You can see we just came back just above it, almost to the tick. Look, we came back to the premium. So what does the market do, guys? The market does 3 things. It runs to liquidities, it runs to hunt liquidity in terms of buy stop and sell stop, or equal highs, equal lows. Market does 3. Run to liquidity. 2, rebalance imbalances. 3, rebalance to, I can't spell, rebalance to equilibrium of the range. Alright, so what did we do? We ran liquidities. We took the liquidities here. Now we run to fill these imbalances. There's a one here, and there's another one which we're running to right now. And 3, the market would on end on equilibrium. So we did this whole move down, which is almost 1,000 tick. We want to come back and end the day at equilibrium. That's how the market gets satisfied. That's how the algo is programmed to do, to satisfy the market, because the market runs on these 3 things. And you can see we came back to premium and we ended the day there. Not premium, so we came back to equilibrium and ended the day there. Right, so that was nice. So what I was expecting, guys, I was expecting us to take this high, and I was telling people, since we were very bearish, even though this pump right here, it doesn't matter, we're very bearish. So this is our target, this is our liquidity pool, so this would be our buy side liquidity. But I was expecting, since the market is closing exactly on this candle, even in the next candle, I wanted to know where can we TP or get out the trade fully. So again, just like we did here, we take the body of the wick to the high, extend it out, and we want to see, because algorithm is very sensitive to the midpoint of the wicks as well, not just order blocks, not just FEGs, but to the wicks, big ones, not just small ones, big ones, like this one, like this one. So as you can see, price came back. Let me remove this line. Price came back to 50% of this wick, and it rejected. So I was telling people, get out here. We possibly may not come back here, but sometimes we pumping, you have your target TP there, market goes almost to it, few ticks away, and then reverse, and you'll be like, damn it, I wish I took some partials, oh damn it, blah 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 blah. This is why, guys, this is why they coded this, so they can go to here and leave this target for tomorrow, exactly what I did today, and we can go over that just now. All right, so now that we know that, let's go into today. So new PM session closed here, blah 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 blah, overnight. Then Asia opened. Since we had big move down, big move up, Asia would most likely to just consolidate, and as it did most of the days, it does. So in London, where some of the action starts, and New York time is where most of the expansion happens. So let me turn this off. All right, so in London, what did we do? In London, we swept Asia there. So step 2, where's our steps? Let me move this, it's enough. Step 2, Chosh. Where do we have a Chosh? We have one there. This one's not valid, we didn't sweep yet. Here we swept. Step 3, where's our Chosh? Sorry, this one, we did sweep this one. We had an entry there. FVG, price come back to the FVG, stop loss at the low, and then we pump up. I didn't take this trade, but this would have been, you would have stopped out by a tick, I think, right there. Yep, you would have been stopped out by a tick. And then again, no problem, price comes back down, so it's more liquidity, which is good for us. Now we have more structure, pumps up, we have a Chosh. We have a Chosh on which candle? On this candle. So this is our FVG. Price never came back to our FVG, unfortunately, and it just went up. Where did it go to? Where did it go to, guys? Right there. The thing I was trying to explain to you guys. It went right there to this high right there. Once it took it, this was London's objective. It took it, and from there the market reversed. Now here I'm gonna explain some really important things that I've learned from ICT. There's 3 things happening here, guys. 3 things actually. And we can use all 3 to take a trade. If you don't know one of the concepts, you can use the other. If you don't know the other concepts, now you can use the third, which is our own strategy. So while I'm waiting for a strategy, for example, a sweep, a Chosh, FAG for entry. Now, what happened? We set previous session high, so we should be looking for shorts, right? But while we wait for that, we can use something called turtle soup. So what's turtle soup? Basically, we have a higher time frame, fair value gap, which is there. Second step, we have a pool of liquidity, so a buy side liquidity, swing high, which even relative swing, relative equal highs right there. Once we sweep that on this candle going up, not the red one, while it's going up, I would take a short. And this would be a turtle soup. And you can, where do you go? All the way down. And this is, I'm going to explain where you put your stop loss in a second. This would be almost 120 ticks with almost zero drawdown. And of course it went way more down. But we don't care about that. We're not greedy. So this is one of the things is called turtle soup. So how would you would basically, as soon as we sweep a high, with a higher time frame fair value gap, so PD array, you can short that very nicely there. Where would you put your stop? Basically simple. Take 50% of this. Let me remove this. Take 50% of this fair value gap. Put your stop loss just above the 50%, because if we go above the 50% of this bearish fair value gap, most likely we're going to come back to the top and even expand even more. So this is my fulcrum point. I would enter there, put my stop loss just above it, like something like that, and then I would target next area of liquidity, which is this, which coincides with our previous session low, which is right there. All right, so this is another way to get almost 10 RR. And I was gonna take this today. I was explaining it yesterday on live that if this what happens, I'm gonna take a short. You can go back and see that I said that. We didn't do it yesterday, we did it today, but I was asleep. So that's one way. Another way, guys, see how all of the concepts coincide. Which concept do I use? You can use our strategy. If while waiting for the strategy, you can look for turtle soup. If turtle soup not there, there's another thing which is very important. Now let me remove these. Well, let me keep this. All right, so we have a high time frame PD array. All right, what happened here? This is called a market maker sell model. Sorry, market maker buy model, which is ICT's favorite to go concept of his, even the strongest, he says. So here it's basically as this. It's very hard concept, but it's very easy to follow. So we have a consolidation. Let me remove this FVG. We have expansion up. We have smart money reversal. We went down. So once we get out this accumulation here, let's put it like this. This is the first step of accumulation. Prices displaces back up, makes another one there, and then pumps one more time. It has smart money reversal right there. Well, how do we know this is smart money reversal? Because this is a higher time frame PD array. We come back into it, we reject down immediately. This would be the first step of reaccumulation. Any point I highlighted is where you can enter. Now this is the buy side of the model. This is the sell side of the model. Market goes down, goes back up. This is the second accumulation phase, and this is the last time where you can take an entry. You can take an entry at this FVG, for example. You could take an entry there, and this would be the last time you'll be able to take a short. Where would you target? This original consolidation, this original accumulation, the lows of it. The market goes back straight there and then starts to hover around because it took its objective. This is called a market maker sell model. Now, most of you probably find this too difficult, but it's very nice concept. You might not notice it while it's going up, but while it's going down, you are see like kind of a hat, like a V. You'll be like, okay, we might be in a MMXM. That's why it's abbreviated. So you can enter there. You missed out this, you missed out this, you missed out this, you missed out this. You can enter there. And ICT says this is the best entry. Second step of accumulation is the best entry to enter. But suppose you don't know this. Suppose you just liked what I told you, but you just forgot how it works. No problem. Go back to our strategy, guys. Go back to the strategy. Look, I'll do everything on the chart. We sweep previous session high. We sweep previous session high. Now we're looking for shorts. Because price goes up. Now we're looking for Chosh, which is our step 2. Step 2, which is Chosh. Right there. We got Chosh right there. Awesome. Step 3, FVG for entry. We have a Chosh and FVG right there. Boom. Where would you enter? Inside the FVG. Right there. You would get tagged in on this candle. Put stop loss at this high. Probably I would give it more room because we have another FVG here. So right here you could put it. You can put it at these here. You can put it there. I personally would have put it there. And I would target previous session low right there. And perhaps even these lows while they coincide. So most likely if I'm going to take out Asia session, I'm probably going to take out these. But we stick to the strategy. So Asia low. That would have gave you almost 2 RR. Again, what I taught you with the turtle soup, didn't have to look back at the chart. What I taught you with the market maker sell model, market maker buy model, MMXM, you forgot about that, no problem. Just stick to the strategy, guys. The strategy does all this for you. It looks for the sweeps, which you did here, looked for here. It does the change of character. So this reversal here, smart money reversal, which is obvious there, but and FVG for an entry to be safe. So it does it for you guys. We took a long, took a short, and boom, simple as that. Now suppose you missed out. Like me, I missed out this trade. I was asleep. Give me a second. I was asleep, so I'm not worried. I'm not foaming in for the next subject. I'm like, oh damn, I missed this move. No problem. There's 4 sessions, guys. We can take long shots on every session. So 4 sessions, highs and lows, 8 possible opportunity to take a trade. I'll be over trading, but that would be good trade. So if we miss out on one, we can always take another. So now what happened here? London closed, New York AM session opened. We go down, we sweep it, nice. So now we're looking for longs. We turn our long tool on, short tool off. Now step 2, we wait for FVG. Chosh, sorry. So I'm gonna go on ES because I took ES today, so I can explain it better. Same thing with ES. They're both almost the same thing. So again, London closed. Now New York AM opened. We swept previous session low. This is not valid because we didn't sweep yet. When did we sweep? We swept this low there. So after this point, we want to look for Chosh. We wait for Chosh. About 10 minutes later, we got Chosh. Very nice. Very nice. Right there. It's mitigated, but look, during the time of the trade, you would see an FVG right there. And we would have entered anywhere inside this FVG. We don't have to look for discount on premium because we only have one FVG. If we have multiple FVGs, then we can decide which one by using discount on premium. But since we have only one FVG, it's our only possible entry. Could have entered anywhere between here. So set it middle for the sake of this. Put stop loss at the low and target previous session high. And just like that, guys. Boom. Market goes up. And boom. And that's 61 ticks on ES. So that's probably around... well, 500 is 250 bucks. So that's about $800, guys. About $800, guys. Easy. I missed out this trade. No problem. I just made 800 bucks here. So... now what you almost familiar with the strategy, but what I'm trying to teach you here, guys, now is how you can risk manage. So where would you put your stop loss? Again, you can put it at these lows, but I wouldn't care. Now remember, guys, this is a bullish candle with a fair value gap. This means the first red candle before it is an order block. This is an order block. We want to respect. We don't want to close below the 50% of this order block. But also we have a big wick. So what do? We take the high to the low of the wick, extend it out. Your stop loss should be anywhere below the 50%. Just give it some room. And you can see the price went up, went back straight to this wick body, to the point, to the tick. You could have took your entry there. Put a stop loss a few ticks away from the midpoint of this. So maybe around this end here. That would have been beautiful. Trade 2.5 RR. Like I said, about 800 bucks with one contract. I went in with 2 contracts, one on different account, one another account, and I closed somewhere around here. I wasn't expecting London to be taken out, but we took it out very nicely. And of course, this trade was a beast. Like I said, also if you took this short there and held, we entered here, right? And held, not just a session low, but you could have almost, again, on NQ was a bit more prominent. So that's very nice, guys. So how much the price can go up? So since we took our objective, which is the London high, how far more can we go? Well, let's use our Fibonacci. Where's the low that formed the Chosh? This low formed the Chosh. Boom. Where's the high that was formed by the Chosh leg? Boom, boom, boom. This high right there. Low, low, high. This is a swing high. We don't use this one. We're not there yet. We use this one. Now put our standard deviations and look. The market, one standard deviation combines intervenes with the London. So this would be Very good target. But if we went above it, how much more can we go? To 2? We can go to 2. You can take your partials, close most position there. Maybe let another one run to 2.5. And if I add even, I don't have it on my chart, but if I add -3 and even maybe -3.4. These are standard deviations, guys. This is not your normal Fibonacci. We went to 3. We don't have to put the 4 on. Just standard deviation. So 1, 2, 2.5 is very important. 3, 4. Where did the price go? It can go to here. Maximum would be here, but that would be just oversighting it. It's too much. Price, look. Price went exactly to 3. It held it there. We used it as support for a second. We came back. Now we're using it as resistance. And the market came back down. Alright, so this is how you can project how much you can go. So if you want to hold a runner, where would you look? Of course, a previous high or low, equal highs or lows. But essentially, this would be your maximum TP. If you want to let run, if you see it just have still momentum, how far can it go? 2.5 to 2 is very important. This is another sweet zone. I want the price, once it comes to this zone, I want it to drop really fast. If we do drop really fast, good. We come back to the equilibrium. 1 second. And sorry about that. But we didn't. We held it. We went above it. So once we go above this, where's our next target? The 3 probably, which is very, very like logical place to go. 4 would be your maximum, but like today is, like I said, it's Friday. We don't expect much action. So that was beautifully said. Just imagine you don't know what's on the right. You just took most of your partials here and you want to hold one runner. You entered 5 contracts, you got 4 out here. How much further can you go? I'll probably close that too, because that is pretty good trade, guys. That's pretty good trade. Probably pass all your accounts with just one single trade. And yeah, so that was it. Now we go to CL. CL again. So we were on futures, now we're on commodities. Let's turn everything off. So going into London, what did we do? We swept we didn't sweep the low, we swept the low. We're in London, we swept previous session high of Asia. Step 2, Chosh. We got Chosh there. Step 3, FEG for entry. Boom, there's no FEG for entry here. So this one, no entry here. Price goes down, goes back one more up, goes down. It forms a Chosh. Price comes back. We have an FEG for entry. We can enter anywhere here. But if I enter anywhere here, well, for example, if I enter there, my stop loss there, my maximum TP with previous session low, which is the Asia low, this will give me 1.33 RR, which is not good. It's not good, guys. It's not good. It's over. Maybe you might win today, but overall, over months, if you just keep taking such trades, you would not be profitable. I want always my trades to be at least 2 RR or more. So what you can do to mitigate this problem? Well, you can, at the expense of missing out the trade, this is the fair value gap, the only one, you can look for the middle point of it, which is this point, and you can enter there, see if this one gives you a better risk to reward. Now we got 2.6, almost 2.6, guys. We just increased, so this would be an ideal entry to take. Price goes down, we came back all the way to here, to 2.13. So I always tell you guys, close most of your position at 2 RR, put stop loss at break even. And unfortunately we didn't take the low, but we made 2 RR, we closed most of our positions, we took partials, and then we got stopped out at break even. No problem, guys. We made our money. Now what happened? Let me remove this again. So now the price went back up. We still didn't take the Asia low. We went one more up to sweep more liquidities. Now we can look for another Chosh for an entry. So here, with the previous session high, we're going down. Chosh, nice. FEG, yes. All our criteria has been met. And just like that, you would enter anywhere in here, even here. We only have one FEG, so no need for discount or premium, you enter as soon as the candle comes back into your FVG. So anywhere around here, put stop loss at the high for instance, and target previous session low. Yep, which gives you 2.5 RR, which is more than 2 RR, which is great. And market, oops, goes up and then crashes down to our TP, hitting our TP just like that. Boom. And this move is 79 ticks. One tick is $10, so that would be 790 bucks, so approximately 800 bucks. I called this out on the group. And hold on, I just want to make sure oh, come on. You can't see my screen? No problem, guys. I'm recording this so you guys can see it on YouTube. I'm not gonna come back again. Oh my god. Anyway, so I told this on the group today. This was the trade I took for ES. You can see it's on trading view, trade away, right there. See, it's live on trade away, like I showed you in the morning earlier. And just give me a second. This guy took out, I called it out CL setup, guys. This guy took it, very nice. Sell here, got out at session low. Me too, got it there. I got in 2 entries there. I got out 1 here. Price came back up, went down. I was left with 1 contract, and I closed. My buy limit was these lows, and boom, it went much more. And yeah, so that was another trade. Now a London session closed. Now we sweep. Now price went up in New York AM. We went down. Sweep previous session low. Very nice, very nice. So now we'll be looking for longs. And just like that, sweep. Second step, Josh. Step 3, FVG. We got an FVG right there. Could take your entry there, anywhere inside there. But stop loss. Where would you put your stop loss? Take your TP would be London high. Your stop loss here would be very far away. So what did I teach you guys? You can see how dynamic this is. We have a big wick. Take the high to the low, extend it out. The midpoint of it is here. So your stop loss can be anywhere around this. So it can be like this. And you can essentially target this. This was not 2RR, but essentially it's a very nice trade. Boom. Now, suppose you missed out this long or you didn't like the RR of this trade. No problem, guys. No problem. Now we swept session high. Now we swept session high. Price goes up. So now we're looking for shorts. We turn our tool for shorts up. Now price goes down. We wait for a Chosh. Step 2, Chosh. We got Chosh 1 right there. Nice. With our FVG. We have only FVG right there. From the Chosh to the high, we only got 1 FVG. So we set a lemon order there. We wait for the price to come back to it. It came back to it right there on this candle. Just like that. Put stop loss at the high. Target previous session low. And boom! You would have been able to catch this whole move. This is 888 ticks. 1 tick is $10, so that would have been almost 880 bucks, so $900 almost again, guys. You could have passed all your accounts just using CL today, 3 trades, or using ES, or using NQ, using 1 day on a Friday, which is a very bad day to trade. And yeah, and of course, guys, if you just held a runner all the way there, 240, that's 2,450 bucks, guys, with 1 single trade if you just held a runner. And now I want to explain something. So how much far can we go now? So once you took your maximum TP, which is London, if you want to hold a runner, further along can you go? Well, where's the Chosh? Chosh is right there. Where's the swing low that formed the Chosh? This one here. Where the swing high that formed the Chosh is here. Where's the swing low that after the Chosh? Right there. Put your standard deviations. Boom. Straight to where we want it to go. This is the sweet spot, like I said, guys. You would have closed. You could have closed most position here. Took a runner till the 1. You could have closed another runner there, and then closed most of your position within the 2 to 2.5 area. price comes back to there and rejects and starts to wiggle. This 2.2 to 2.5 is an extremely important sensitive algorithmic price action signature. All right, so that's pretty much it, guys. So I hope you enjoyed this. This video is on YouTube. You're gonna see it on YouTube. So for those who had problems with the audio, you would see it there. All right, see you later, guys. Peace.